Imagine waking up one morning and realizing that $1 trillion, more money than most countries produce in a year, had simply vanished. No war, no alien invasion, just gone. It was September 29th, 2008, the day global markets went into cardiac arrest. In less than 24 hours, the Dow Jones collapsed by 777 points, the biggest single-day drop in its history at that time. Traders were shouting, phones were ringing non-stop, and the entire world was asking the same question: where did the money go? To understand that day, we need to rewind a few years, back to the early 2000s. The U.S. housing market was booming. Banks were giving out home loans to almost anyone. Even people with bad credit could buy a house, sometimes two. Wall Street packaged those risky home loans into safe investments called mortgage-backed securities and sold them all around the world. For a while, it looked like free money. Everyone, from small-town investors to giant banks, was making profits. But behind the scenes, the system was filled with rotten loans. It was only a matter of time before the bubble burst, and then it did. Fast forward to 2008. Homeowners started defaulting on their mortgages. The supposedly safe assets were now toxic. Major investment banks like Lehman Brothers, Bear Stearns, and AIG held billions of dollars in these collapsing securities. When Lehman Brothers went bankrupt, panic spread like wildfire. Investors rushed to pull their money out of everything: stocks, bonds, funds. No one trusted anyone anymore. In just a single trading day, the U.S. stock market lost about $1.2 trillion in value. But that money didn't move anywhere. It wasn't stolen or transferred. It evaporated because the perceived value of companies collapsed. When millions of people try to sell at once, prices plummet. And in financial markets, value only exists as long as people believe in it. That day, belief broke. The U.S. government panicked. Congress debated an emergency $700 billion bailout called TARP, the Troubled Asset Relief Program. But when lawmakers initially rejected it, markets collapsed again. People were terrified that the entire financial system might collapse. ATMs stopped working. Banks shut down. Chaos everywhere. Eventually, the bailout passed. But the damage was done. The world had learned a brutal truth. In finance, money isn't destroyed by fire or theft. It disappears when confidence dies. So where did that $1 trillion go? It went nowhere. It was simply the collective illusion of value, shattered in a single day of panic. And maybe that's the real lesson of 2008, that the modern financial world doesn't run on gold or paper. It runs on trust. And once trust breaks, even $1 trillion can vanish like smoke.